video, I will show you how 8 Singapore companies boosted their dividends in 2024, helping you spot great dividend stocks for your portfolio. These companies stayed strong during tough times, which means better passive income chances for investors like you. Hey friends, welcome back to the channel. I'm Iggy here, and I've been covering topics such as stocks, finance, CPF, and everything about growing your wealth. In this video, I will show you how 8 Singapore companies boosted their dividends in 2024. The Investing Iguana is featured and ranked 8th in the 2023 Influential Tigers by Tiger Brokers, with over 800,000 reads. I've covered over 600 videos and accumulated over 280,000 watch hours as of November 2024. The Investing Iguana has just been nominated as one of the choices for the most popular influencers on Tiger Brokers in 2024. Let's dive into Singapore's banking sector, starting with our largest bank, DBS. Their performance has been nothing short of extraordinary this year. For the first 9 months of 2024, DBS achieved a record-breaking net profit of $8.8 billion, marking an impressive 12% increase from the previous year. Their total income surged to $16.8 billion, up 11% year on year, driven by strong growth in both interest and non-interest income. Most importantly for dividend investors, DBS increased their dividend by 28.6% to 162 per share. OCBC, our second largest bank, has also delivered exceptional results. Their total income reached $11.1 billion, representing an 8% increase, while their net profit grew by 9% to $5.9 billion. The bank rewarded shareholders by raising their interim dividend by 10% to 0.44 SGX per share. UOB completes our banking trio with solid performance. Despite global economic headwinds, they maintained their growth trajectory and increased their interim dividend from $0.85 to $0.88. Their commitment to shareholder returns remains unwavering, with expectations of double-digit fee growth and positive total income growth for the coming year. Ifast has been a real game changer in the financial technology space, and their recent performance is a testament to that. They've seen incredible growth, with their net revenue skyrocketing by a whopping 75.5% to a massive $183.5 million. That's not all. Their net profit has more than tripled, reaching a staggering $47.4 million zone. This impressive performance has allowed them to reward their shareholders with a generous 26.5% increase in dividends, bringing the total payout to $0.43 per share. What's even more exciting is the surge in assets under administration, which has hit a new record high of $23.6 billion. This clearly demonstrates the immense trust and confidence that customers have placed in Ifast. It's a clear sign that they're doing something right, and their future looks incredibly bright. As an investor, it's always exciting to see companies like Ifast thriving and delivering such strong results. It's a testament to the power of innovation and the growing demand for sophisticated financial solutions. Let's talk about our very own Singapore Exchange, or SGX as we all know it. They've just released some numbers and things are looking pretty good. Revenue is up 3.1% to a solid $1.2 billion. That's not just good, that's a sign of a healthy market. But what really catches my eye, and I'm sure yours too, is the dividend. They've bumped it up to 0.09 per quarter. Now, if you annualize that, we're talking 0.36x per share. That's some nice passive income flowing into your portfolio. Remember, dividends are a great way to build long-term wealth, especially in a stable market like Singapore. This increase shows confidence from SGX in its own performance and future prospects. It's like them saying, hey, we're doing well and we want to share the success with you, our investors. But it doesn't stop there, my friends. SGX has laid out its medium-term strategy, and they're aiming for 6 to 8% annual revenue growth. Now, if they hit that target, and history tells us they often do, guess what that means? Potential for even more dividend increases down the line. This is where the magic of compounding really kicks in. Reinvesting those dividends can supercharge your returns over time. Think of it like this. You're not just earning from the stock price going up, you're also earning from the dividends, and then you're earning even more from the dividends you reinvest. It's a beautiful cycle of growth. All right, folks, Iggy here, And let's talk about Singtel. Now, they've been facing some headwinds with revenue, no doubt about it. But here's the interesting bit. They've seriously tightened their belts and become way more efficient. Think of it like this. You might not be earning more, but if you're spending less, you end up with more in your pocket, right? That's exactly what Singtel has done. Their operating profit, which is basically the profit they make from their core business operations, shot up by a whopping 27% to $738 million. That's a substantial jump, and it shows they're managing their resources much better. And because of this improved efficiency, they're rewarding shareholders with a bigger payout. Their interim dividend, that's the payment they make to shareholders halfway through the financial year, has increased by a hefty 35% to $0.07 per share. This is a good sign for investors, indicating the company's confidence in its financial health and commitment to returning value. This is especially important in Singapore's current economic climate, where many are concerned about inflation and the rising cost of living. A steady dividend payout can be a welcome source of income for many Singaporean investors. Now, the key to Singtel's future, and what we really need to keep an eye on, is their ST28 strategic plan. This plan is all about two main things: digital transformation and expanding their reach in the region. Digital transformation is crucial for any telco these days. It's about embracing new technologies, improving customer experience through digital channels, and offering innovative services. This could mean anything from better mobile apps to cloud computing solutions. The regional expansion part is also important. Singapore is a relatively small market, so for Singtel to really grow, they need to tap into other markets in Southeast Asia and beyond. NetLink NBN Trust. While they did see a little dip in revenue recently, let's not jump to conclusions just yet. What's really caught my eye is their dedication to us shareholders. They actually bumped up their distribution per unit by 1.1% to $0.268. That's like getting a little bonus in your pocket, which is always a good thing, right? This shows they're focused on returning value to investors, even when facing some minor headwinds. Plus, they've got some interesting expansion plans brewing up north. Think about it. More homes, more businesses, more demand for their services. This could translate to some healthy new revenue streams down the line, which in turn could mean even more distributions for us. It's all about looking at the bigger picture, my friends. Let's talk about SingPost, a familiar name to us Singaporeans. Now, they've been making some interesting moves, especially down under in Australia. It seems their Aussie ventures are really paying off. We're talking about a 20% leap in revenue, hitting a solid $992.4 million. But get this, their Australian business alone brought in a whopping $574.9 million, which is a massive 44% surge. That's like a rocket launch in revenue terms. This strong performance has allowed them to boost their interim dividend by a whopping 89% to $0.34. That's some serious returns for shareholders. This tells us a few things. Firstly, their strategy of expanding and focusing on operations in Australia seems to be working wonders. Secondly, it shows that SingPost isn't just about letters and parcels anymore. They're diversifying and finding new avenues for growth. This focus on operational efficiency and these strategic initiatives are what really set them up for future success. It shows they are adapting to the changing landscape of logistics and e-commerce. It's always good to see local companies like SingPost making smart moves and delivering results. These dividend increases aren't just numbers. They represent real opportunities for income investors. The banking sector shows particular strength, with all three local banks raising dividends while maintaining healthy capital positions. The technology and infrastructure sectors also demonstrate promising dividend growth potential, supported by strong business fundamentals. If you found value in understanding these dividend-paying companies, you'll definitely want to check out my comprehensive video, Unlocking Lifelong Dividends, 4 Key Singapore Stocks to Consider. In that video, I break down the exact criteria I use to identify stocks with sustainable dividend growth potential. Click the link above or find it in the description below. Remember to hit that like button if you found this analysis helpful, and subscribe to The Investing Iguana for more insights on building wealth through dividend investing. Together, we can make smarter investment decisions and grow our passive income streams.